Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Friends, welcome to Securities Business Studies online classes. Students, in the previous class we have studied about the National Stock Exchange of India, NSEI. Today we will take up the other one, that is Bombay Stock Exchange Limited. Bombay Stock Exchange Limited, we call it as BSE. In news or in some channels you might have seen BSE Sensex, isn't it? Sensex means sensitive index. Sensitive index. I will tell those things later. After completing the chapter, I will tell those some terms that are used in stock exchanges. I will tell. But for the time being, Sensex means the sensitive index. Bombay Stock Exchange. It was established in 1875, and this is the first world's, that's Asian stock exchange, the first stock exchange of Asia, established long back in 1875. And the reason why BSE has been, Bombay Stock Exchange has been invented or established, because to make sure that the orderly growth of securities market, to maintain discipline, to bring a discipline in the securities market, that is dealing in long-term securities, buying and selling of long-term securities like shares, debentures, bonds, or whatever the name you call, which are long-term in nature. The exchange dealing of in these securities, there should be a discipline, because I already told you in my previous classes that at the beginning, when I think during 1900s, isn't it? During that time, the bidding, I told you, share certificates, the brokers, they used to hold like this and they used to call the bid, and the highest bidder will be given the shares. That was the system, because there was no computer system developed, no digital technology was there, isn't it? After that, slowly the digital technology has been introduced, and it has been implemented in stock exchange also, dealings in securities. Now you can see that is a totally refined, redefined, that is digital technology in stock exchanges. So BSE Limited, it was established to make sure of, and it was set up as a corporate body, corporate entity with a broad shareholders base, and it has been recognized as one of the, that is biggest stock exchange, and there are as much as more than 5,000 companies listed in BSE from India, and also the trading is done, or exchange of securities is done all over the world through the BSE. Now, what are the objectives of BSE? What are the objectives? Let us analyze why the BSE has been introduced, or what are the reason behind the establishment of BSE, and what is the objective of, that is, establishing BSE. First one is to provide an efficient and transparent market. Efficient and transparent market for trading of securities. That's a long-term securities, that is even including the instruments like mutual funds, derivatives. What do you mean by derivatives? Derivatives are the stocks or securities which have no value, but they will help to speculate. Their trading will help in the speculation in other securities. There is a base. These are like useless, wastage, or which are not demanded by anyone, but sometimes the purchase of those securities will create speculation. Suppose, let me tell you, maybe 1 rupee per share is there. Any script for that matter. Now, you buy in large quantities. Maybe 1 lakh shares have been bought by someone. By seeing that there is a movement now, the others will also start buying securities. Then slowly the demand for these securities will increase. Most of them will buy. The price will move upwards. There's 1 to 2, 3, maybe 10, maybe 20. Like that, speculation is possible. So when you buy at rupee 1 and when the price reaches to 20, don't you think you are getting profit? Yes, but they were the nominal value securities, the negligible value securities, isn't it? Or no value for that. But trading will create speculation. Such securities are called derivatives. Then here, so mutual funds also. What do you mean? I mean by mutual funds. Mutual funds are, they are the savings made by the common man who are maybe below average or average income groups, isn't it? To create a habit of there's a thrift or savings among the people. For that reason, mutual funds, people invest in mutual funds. And remember, investment in mutual funds are subject to market risks. Read all scheme related documents carefully, isn't it? Whenever the advertisement for mutual fund investment is given, along with that the risk factor should also be told, because it is the statutory requirement. But mutual funds, they give some sort of income to the people, but while investing you should be very sure of whether the group is good or not. Otherwise, one fine morning you may see mutual funds are not there in the market at all. But nowadays some sort of securities there, because there are some rules and regulations to be followed while issuing the offer of mutual funds. Then also there are some guidelines, there are some rules and regulations to be followed by the companies, isn't it? And those companies should have been listed in the stock exchange. Such many restrictions are imposed so that the investors funds are not misused or misappropriated, for that reason. So mutual funds, all these are dealt. So here, efficient and transparent. Efficient means that is reducing the cost, giving more output, isn't it? Good service to the investor, giving information, education to the investor. All this comes under the efficiency of the stock exchange. To maintain efficiency in the stock exchange and to have transparent dealing of securities. Transparent dealing of, dealing means trading of securities like mutual funds, derivatives or shares, isn't it? Equities. All these comes under, that is the main objective of stock exchange. Transparent in the sense, no chance for any misappropriation, no chance for any faulty dealings, or the people can see in the computer screen. There is no control over the prices by the agent or broker or whatever the name you call the intermediary, but there is control by the stock exchange, isn't it? The securities prices are quoted depending upon the demand for and supply of the securities. If the supply increases, the rate falls, isn't it? If the supply decreases, demand increases, then the rate will increase. The rate for the securities will increase. That is the common, a feature of any market, isn't it? So here, efficient and transparent dealing to be conducted in the stock exchanges. That was the first, foremost objective, first and foremost objective of stock exchange. Second one is to provide trading platform for equities of small and medium enterprises. Trading platform for small and medium enterprises. Small enterprises, isn't it? That is maybe who are operating on a small scale, and medium enterprises. There are some definitions regarding the capital outlay for medium and small enterprises. defined in the act, isn't it? Small scale industries. So here let us not venture on that. You have studied in first year regarding that. Now let me make clear that trading platform for small and medium enterprises, because these small and medium enterprises, they will find difficulty in reaching the capital market. For that reason, discipline, that is rules and regulations are brought that they give more importance to the small and medium enterprises. The Securities and Exchange Board of India, it gives more importance for these things. So Bombay Stock Exchange has been established for giving a clear, very that is efficient platform for trading the securities of small and medium enterprises, so that the small and medium enterprises can raise money from the market. They can sell their securities in the market, they can raise money so that they can run their business in an efficient way. These enterprises can be run in an efficient way. That is the second objective of that is a BSE Limited. Third one is to provide other services like risk management, education, other services. That is risk management, education, then clearing, settlement, yes, these are the other services that are provided by the Bombay Stock Exchange Limited, that is BSE. Risk management in the sense how to manage your risk, how to minimize your risk. Nowadays some that is mutual funds, what they will do is how they manage. They will invest in different securities. That is called a portfolio of securities. Portfolio in the sense the total securities in which the money is being invested. Maybe the total amount invested by you is rupees 1000. The mutual fund companies, what they will do is they may invest 50% in equity market, maybe in shares, then maybe 20% in government bonds, isn't it? And maybe 10% in companies, that is giving loan and other that is financial help to the companies, isn't it? Maybe some other percentage, maybe in other that is for private people or all these things. So they will invest in different securities, maybe in government bonds or that is NSCs, isn't it? That is National Savings Certificate. In these they may invest, so that what will happen is, if there is a risk, you have invested in one share, suppose. You may be knowing that is a Nestle company suffered a lot, isn't it? Because of some issues. It's some content in the Maggi noodles, isn't it? Because of that the share price has come down. If the mutual fund company invests in the same share, entire amount is invested in that share, then what will happen? When the price comes down, now it has increased like anything. Now the share price it is quoting around 16,000 odd, isn't it? It has come down to 5,000, around 5,000 rupees during that time. So there is steep decline in the price of the market price of the security. But here what happens is, if the entire amount is invested in that, then the mutual fund companies, they have to bear a loss, they have to incur loss. So what they will do is, they will diversify the risk. That is called risk management, isn't it? Like students, they will score, they will put 100% of their efforts only in one subject. Maybe accountancy is very easy for them, they will concentrate only, they will read only accountancy, isn't it? What happens? The other first subject, economics, business studies, or maybe English, sometimes for Kannada medium students, it may become very hard, they may not score well, ultimately the percentage will come down, isn't it? If the student appears for only one exam, what happens? Student knows the accountancy is very easy for me, I will appear only for accountancy, what will happen? Fail. Other subjects not attended, absent and ultimately fail. result. If the student concentrates in all the subjects, accountancy is very easy, isn't it? But the student puts his efforts in all other subjects also, equally puts his efforts in all the subjects. What will happen? The student will score even marks, that is almost equal marks in all the subjects. Ultimately the result will be pass. So that is diversification. Attention is diversified from accountancy to all other subjects so that the student has not failed. If you concentrate in only one subject, accountancy, and if you have appeared for only one subject in the examination, the student has failed, because the concentration, the investment was only in accountancy, no other subjects. So this is called diversifying the investment in portfolio of securities. All the subjects are portfolio of securities here, like shares, bonds, debentures, all these are the different investment opportunities, isn't it? So this is what the mutual fund companies will do. That is, they will diversify their investments so that the risk will be reduced. They want to minimize the risk and maximize the return. So that is called risk management, which is done by Bombay Stock Exchange Limited. Next, that is education. They provide education. It is not that PUC education, degree education, BCom, MCom. No, it is not. They educate the people regarding the investment, and that is how to get maximum return by assuming minimum risk. That education will be given, training will be given. So that is another, that is objective. And clearing in the sense, when a trading is done, one deal is done among the buyers and sellers, among the investors, then proper clearing of the amount, the settlement, on the settlement date, they have to clear. The person bought must pay money, and the person who sold must receive the money. That is clearing. So to have a discipline in clearing and settlement, the BSE has been established to bring a discipline in the stock market. Then next one is fourth one, to ensure active trading and safeguard market integrity. To safeguard market integrity. What do you mean by integrity? Safeguard market integrity. That means the people should trust the market. Once the people believe that yes, the market is transparent and there are no misappropriations, they will come, then they will start doing their dealings. Otherwise, who will come? If a bank, isn't it, is not working properly, do you think the customers will reach there? Take the simple case of a restaurant. You will visit once, isn't it? You will order for some snacks and you will eat. And if you feel like it is not giving any satisfaction to you, do you revisit again? Do you enter that hotel again? No, never. In the same way, here the market integrity should be maintained so that the investors' interest is safeguarded. For that reason, to safeguard the interest of the investors by creating market integrity, the BSE has been established. Last one is to conform to international standards. Fifth one, to conform to international standards. Conform to international standards. Yes, of course, to bring a discipline which is brought up to the level of international standards or benchmark. That is international benchmark for, that is dealings in securities should be brought in India also. For that reason, the Bombay Stock Exchange has been established, and these are the various, that is objectives of this Bombay Stock Exchange, establishment of Bombay Stock Exchange. Now let us move on to the next part. Yes, let me tell you something about the quoting of Bombay Stock Exchange. We call it as Sensex. Sensex, Bombay Stock Exchange, BSE Sensex we call it as, that is Bombay Stock Exchange Sensitive Index, that is what the BSE Sensex is. You can see in CNBC channel, that is at every point of time you will see the movement in the, that is what, quote, isn't it, quote of the companies, that is the price of the companies and even the index of the BSE. How it is decided? What is Sensex then? Nowhere it is mentioned, it is given in a box in your NCERT syllabus, but still let us know something about it. This index is decided by taking the prices of 30 companies' securities. BSE Sensex means it has been fixed at a particular time. It will be fixed at a particular time, and on that day, the day of fixing, the security prices will be taken as 100 or 1000 or 1000. A common base will be created for all the securities. Here, 30 companies' securities which are very strong. The companies which are fundamentally strong, economically strong, such companies' share prices were taken by the Bombay Stock Exchange Limited, and the base price was made as 1000, and any increase further will be represented in the form of percentage, or that is a Sensex. So here it was 1000, all the 30 companies share price is increased, maybe 20 companies price is increased, 10 companies price is decreased. Again, the total of 30 companies, that is price was 30,000 suppose. So 1000 average. If we take after maybe 1 year or every day we are taking those 30 companies prices, the total of it is 31,500 suppose. Divided by 30, isn't it? So it will be 1050. This is the Sensex. There is a movement. It was 1000, now it is increased to 1050. How it is? 30 companies total, that is amount is 30,000. Share price is 30,000. So we divide it by 30, average will be 1000, isn't it? That is the quote. Then after, on the next day, the total share price of these 30 companies has reached to 31,500. Now divided by 30, you will get 1050 as the average. So there is increase in the Sensex. They will give the upward arrow mark, and there is 50. They will say 1000. There is increase of 50, and Sensex will be shown as 1050. In the same way, after maybe 2 or 3 years, the total of those 30 companies has reached to 60,000. Now the average divided by 30, the average price is 2,000. This is the increase. This is the quote. They give. They will say 1000 increase. And you will get all the statistics of each and every company. Dividend payout ratio, how much dividend is declared, what is the lowest quote, what is the highest quote of the day, what is the closing price of yesterday, isn't it? And what is the 52 weeks low and high, that is 1 year. Everything you can see in the, that is app is there. And even if you go to stock exchanges, they will guide you. They will tell you any information you need, that will be provided, isn't it? So here Sensex means that is the quote of the strong, fundamentally strong 30 companies, that is called Sensex. So Bombay Stock Exchange Sensitive Index, it may be given for expansion, expand BSE Sensex, then you should be in a position to write Bombay Stock Exchange Sensitive Index for 1 mark. Clear? NSE we have already covered, that is National Stock Exchange of India. There let me give you information, that is it is the prices of 50 strong companies. So we call it as Nifty, National Stock Exchange, NSE Nifty, that is National Stock Exchange Index of 50 companies it is. National Stock Exchange Index of 50 companies. So here we take 50 companies together, like that is fundamentally strong companies, and their share price will be taken together and it will be averaged, and we will decide how much is this index like this. Understood now how they decide? So they will take 1 year as the base, and any increase in the prices, there is consumer price index you are calculating, isn't it? In the same way, here we will calculate how much increase in the price of those securities and what is the percentage. So in that way we will quote the index, that is called Sensex and Nifty. Nifty 50 companies, Sensex 30 companies, that's the only difference. Clear? Yes. Now let us move on to the next topic, is Securities and Exchange Board of India, SEBI. Securities and Exchange Board of India. Very, very important from examination point of view. Stock Exchange and Securities and Exchange Board of India, SEBI, these are the main two that is topics where you may get 8 marks question. Most of the times they will ask you a question either on that is SEBI or on that is a stock exchange. Let us know what is Securities and Exchange Board of India. Securities and Exchange Board of India. SEBI is a short form. They may ask you for 1 mark also, expand SEBI. You should write Securities and Exchange Board of India. Don't use this symbol, write and in spelling, okay? Make sure of it. So it was established on 12th April 1988. 12th April 1988. This was established. For what purpose? The purpose of establishing SEBI was for bringing, that is a healthy growth of capital market. For the healthy growth of capital market, SEBI has been, that is established. What are the other that is objectives? Is to protect investor interest. Interest of the investor is to be protected. I already told you the risk should be minimized. Maximum service should be provided, isn't it? And maximum return should be given to the investor, and investor guidance, education, training, everything should be provided to the investor, so that there will be healthy growth of capital market. Once the investor loses confidence, the same thing will happen, which we have seen many finance companies. One fine morning you will not find the board also, isn't it? Only it will be converted either into a canteen, because they will hire. They will be on rental basis. Only the room will be there, building will be there, isn't it? It is the owner of that building will be someone else. So makes no difference for them. They will run away. Some computers will be left, and the owner will occupy it, because rent may be pending. So for such situations you have seen. So investors should get confidence. They should have confidence and they should trust the stock exchange, so that they will invest in the security. Otherwise, no one will come forward to invest in the security. So here, Securities and Exchange Board of India was established to bring discipline, to provide service, efficient service to the investors, and for the healthy growth of the capital market. Then it was given, that is a legal status, that is a statutory status was given on 30th January 1992. 1992. That is, the SEBI Act was passed. Securities and Exchange Board Act was passed in the Parliament, isn't it? That is like a statutory corporation. You have studied in first year under private, public and global enterprises. There three forms of, that is organizations, departmental undertakings, public corporation or statutory corporation, and third one is government companies. Correct. Three forms of business: private, public and global enterprises, depending upon the ownership of the organizations. So here this was given the status of, that is statutory corporation, which means a special act is required to start any statutory corporations, like a life insurance corporation. The name of such entities will end with the word corporation, isn't it? That is Karnataka State Finance Corporation, Karnataka State Road Transport Corporation. All these are established. The Life Insurance Corporation of India, isn't it? These are established by passing a statute, that is in the Parliament, Act of Parliament or state legislature. If it is established by the state, that is state legislature, one, that's ordinance is to be passed, isn't it? And if it is in the at the central level, then it is in the Parliament. So SEBI was given that is a legal status. It was given made as corporation by passing an ordinance in the Parliament, and it was established under a special act. Why it is established? Because growth of capital market during 1980s increased like anything. There was increase in the growth of, that is a volume of transactions, the dealings in the stock market increased like anything. So it was not possible for the existing institutions at that time to control the stock capital market, which was growing in multifaceted. So an apex institution was thought of to bring a discipline in the capital market and for the healthy growth of, that is capital market and protection of investor and that is investor interest and sentiments. That for that reason the SEBI was established. That was the main reason why SEBI was established. Then purpose and role of SEBI: meeting the needs of three groups. There are three groups in the, that is a stock market. First one is investors, isn't it? Second one is companies. That is issuers of securities. Investors are individual people or common investor. Then issuers of securities. When the companies issue securities, then only business can be done. Otherwise, if there are no securities, what you will do? If there are no students, can we run the institute? If there are no teachers, can you run the institute? If there is no management, can you run the institute? No, because they are the part of the total system, isn't it? If one system is out, gone. The student's performance, the student can score very well only when there is cooperation from all the sides, like teachers, student and the parents. Management will support the teachers, isn't it? And they are also a part. And support is required from all angles. If parents go off the scene, then student may not study at home. Most of the students, they never study without the, that is guidance of the parents also. There should be a good environment created, learning environment should be created at home also by the parents, isn't it? In class, the teacher should give best of their efforts, put forward best of their efforts, and they should make sure that the students will learn, isn't it? And they will deliver. So these are the parties for the growth of the, that is educational career of a student. In the same way here, issuers of securities, they are one of the part of capital market. The companies, we call them as, the companies are corporate entities. Then investors, the people who invest money, those who buy the securities, those who deal in the securities in the market. And the third one is intermediaries. See, in real estate industries, you might have seen, isn't it? Real estate. What is your business? Real estate business. Actually, they do the broking business, isn't it? Here also in the stock market, to bring the investors and the people who receive the investment. The people who are ready to invest, who have made their savings and who want to invest, and the people who want to use those investment, use those funds for productive purpose, isn't it? So for that there must be an intermediary, and the intermediary will connect, like the person who wants to sell the house and person who wants to buy the house, those both of them will be connected together by the broker. In the same way here, intermediaries in the stock market, capital market. So these are the three people who are working in the system of that is a stock market. So meeting the needs of three people, that is investors, issuers of securities and companies or corporate entities, and the intermediaries is the main purpose of the Securities and Exchange Board of India. All the that is three groups' interest should be protected and risk should be avoided. Then capital market should be developed. That is, healthy growth of capital market is the main intention of the Securities and Exchange Board of India. So let us know the objectives of that is SEBI, Securities and Exchange Board of India. First one is to regulate stock exchange or to control stock exchange. Regulate stock exchange or control stock exchange in an orderly manner. Orderly manner in the sense there should be some sort of discipline, there should be some sort of that is efficient service to the investors, there should be some sort of that is rules and regulations which should be adhered or followed by all the that is interest groups like investors, issuers of securities and the intermediaries. So that is the main objective of SEBI. Second one is to protect the rights of common individuals. To protect the rights of common individuals. What do you mean by this? Common individuals in the sense the people who invest, the ordinary man, the common man, isn't it? The people who save their money, who want to invest, who want to get back their money without much risk and some sort of return on the investment. So here the stock exchange, the SEBI will guide them, it will educate the people, will give training how to assume risk and how to earn money, how to minimize the risk. Regarding that, the qualitative information, after doing some research, they will provide this information so that the investor's interest is protected. And the investor will invest, he will get maximum return with minimum risk. So this is another objective of that is SEBI. Third one is prevent trading malpractices. Prevent trading malpractices. What do you mean by trading malpractice? Like manipulating the prices, like insider trading. The person who is working in the stock exchange, he himself is involved in that is dealing of securities. What happens? He can manipulate. I will give best example. Suppose one that is a broker, isn't it? Having many clients, may having many that is people who have been registered. The person may guide that is ABC Limited. ABC Limited company's shares are very strong, and within 1 year it may increase to 4 times. If such news is spread by this broker, what will happen? What will happen? Because he has bought suppose 5,000 shares or 10,000 shares. He has accumulated the shares of ABC Limited at very low price. When he spreads the news, everyone will be interested to buy. One person starts buying, second person, the other person, third, fourth, they will recommend it to others also. Then there will be huge demand for the shares of security of ABC Limited. Ultimately what happens? When the demand increases, prices also will increase, price will increase, isn't it? Then what happens ultimately? Everyone will start buying the shares there may be shortage of shares in the market. Then by that time, this person, the broker, he may sell all his shares at higher price. People continuously start buying. There is artificial shortage of shares in the market, and everyone will start buying, and this person will sell and he will make money. Suppose he has bought it maybe 100 rupees per share. Now the share price has increased to maybe 5,000. This person will sell at 5,000 and book a profit of rupees 4,900 per share. You just imagine how much money he can make. So if such activities are done, these activities are not as per the law. This is called malpractice in the securities market. Because the person who invests should not be the authority. If he is the authority, then what happens? Ultimately, he will manipulate the prices, he will do malpractice. This is called insider trading activity. Insider trading activity. So this is about the preventing trading malpractices, and that is another objective of SEBI. Then fourth one is to regulate and develop a code of conduct and fair practices by intermediaries. Code of conduct, that is discipline, isn't it? In the dealings. Discipline does not mean that it is human behavior, it is also related to the system. There should be a code of conduct, how the procedure should be, how the investor has to approach, how he can invest in the shares, how he can buy, how he can sell, what are the rules and regulations related to buying and selling, when he has to pay the amount of the shares bought, when the money will be paid to him, isn't it? All these are, that settlement, buying and selling, all these dealings, everything comes under code of conduct. So there should be a proper discipline in the, that is a stock exchange. That is another objective of the discipline. Up the functions of SEBI in the next class. Now take down assignment. Mention the objectives of Bombay Stock Exchange Limited. Mention the objectives of Bombay Stock Exchange Limited. Submit assignment on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.